Supports and resistances are key areas to recognize when analyzing the chart of an asset. Support and resistance are the areas where price is often rejected. The support zone is found below the current market price, while the resistance is found above the current market price. The identification of these areas is absolutely vital to understand the direction of the market, and above all, to understand the supply and demand of the market participants. Supports are also known as demand zones, in which the demand exceeds the supply, pushing the price up. Resistances, on the other hand, are also known as supply zones, in which the supply exceeds the demand, pushing the price down. Most traders, before considering any type of trading, wait for the price to enter these sensitive areas, where there is the greatest activity from the market participants. The support acts like the floor, while the resistance acts like the ceiling. The price that is rejected around a support level will have a potential reversal in an uptrend. The price that is rejected around a resistance level will have a potential reversal in a bearish trend. If the price breaks a support level, there will be a potential bearish trend continuation. If the price breaks a resistance level, there will be a potential bullish continuation. The support and resistance levels are also identified as psychological zones, or sensitive zones, because they are often found near round price levels such as 1.1500. Price levels with round numbers ending in 00 or 50 represent important zones because millions of orders will be placed around these prices, which will cause the price to move accordingly. In these zones there will be traders who place profit targets just before the current key price. Other traders will instead enter the market when the price is reached, while others will place limit orders, or stop orders, just above or below, to try and maximize all the length of the price movement. As we can see, these price levels are filled with liquidity, and before a potential price continuation or reversal takes place, it may take a while to see who from the buyers and sellers has imposed themselves taking the control of the market. For us retail traders, it is essential to be patient and carefully analyze price movements in order to follow the current market sentiment. The price will not immediately break a psychological zone, but it will have corrections to accumulate liquidity before following the new direction. The same is true before having a trend reversal. The identification of a support or a resistance zone, correlated to a key price level, already represents a good basis to work on. Together with these two confluences, a fundamental analysis must be combined for the analyzed assets, as well as price action analysis, technical chart patterns, and lastly an indicator can be combined as a further confirmation. A support and resistance zone is created with a minimum of 2 bounces. The third bounce is often the best time to enter the market. If the price breaks above the resistance zone, and confirms a bullish continuation move, with a retest of the previous zone, this zone would transform from resistance level to support level. Should the price break below the support zone, and confirm a continuation bearish move, with a retest on the previous zone, this zone would transform from a support level to a resistance level.